quickly pull back. That pullback towards the 50 validates the, what the hell is it? Rally-based drop, I don't know, drop-based rally or some crap that they teach in these other schools. I can't remember how it goes. But anyway, but it's a two-pronged approach. It also triggers the stops on the second pass down of anybody that was long and got it right. And it also lets those traders that end up at a +1 or a scratch, makes you scratch out with +1 or +3 or -5. There's a lot going on in that aggressive W formation. Understand? Same thing in the M. Again, they flip the pins to the downside to trap the traders at the lower levels. Because after all, the 50 and the 200 are wide open. So you got anticipated continuation down. But we know now that if the low that was formed during London holds, and they make two more passes out at forming another W and issue a hammer at 945, it's game over. You are a buyer against the retail trend in line with the market maker. You own these bastards today. Further confirmation is seen on the shift of the zone off of the low to further trap the lower level short sellers and to take out the entire 6-8 hours of structure work all in here that they've done. That one candle destroys the entire structure that was built against the retail traders, trapping them all. The market is then into consolidation to create false sense of security for the downtrend continuation. It is again shifted away to trigger the stops, bounce off the 200 pins to the mayonnaise, and ends the day back in consolidation. Their business is done for the day. They did their damage. Okay? You guys good? Understand? Now, I have my bias. I know what to expect. The next night, I expect stop, hunt, low, rise. The next night, I expect stop, hunt, low, rise. They mess with you on the timings on this particular chart because they did the stop, hunt, low, and rise by the time you come to your terminal at London Open. It happened in Asia. You missed it. Not a big deal. But right at the end of the box, they threw railroad tracks to the low, and they even threw a hammer. There's a W in there, or there's a V bottom. You expect this, and they gave it to you. See it? Okay, they come out of the box, they go low. You are a buyer against the retail trader mentality long because you have your W formation. That's your anchor point for the week. W, V, V, M. Sorry about your luck. Do not counter. This is a counter here that worked. Do not counter here. I'm sorry, at V1. Do not counter at V1. It doesn't give you the trade. See the setup? It does not offer you the retracement to counter. It doesn't pay out. Now, notice how the pins flip to the top side. Notice how they flip to the downside over here. Notice how the aggressive moves end in pins to the top side. Railroad tracks at the U.S. session. This is level 3 behavior. Chop. 1, 2, 3 days of rise is seen. Disguised in different sessions, moved over a little bit to mess with your timing. Market makers give it out, give it out, give it out, need some back. Sell to the buyers, sell to the buyers, sell to the buyers. I need some of my money back, man. Correct the market. Okay, hope you guys are seeing this stuff. Okay, remember I mentioned in the thing, market makers will not move in one direction more than 3 days in a row without some type of collection of money. I know you say, Steve, the euro's been rising since my birthday, blah, whatever. I understand that. It didn't make a straight rise. Candles aren't stacked on top of each other straight up to heaven. They have to make pullbacks. Now remember the psychology element that's built in. The psychology element warrants that you will get on the trend at the worst possible time because of the 3 pushes inside the chart. They show you something, they get the whole world seeing it, technically, and then they act against it and mess with you. Notice the breakdown of this chart, okay? This is an entire week. Here's my Friday, Sunday, Monday tracers, right? Okay, let's look at it again now. Now with a different eye. Consolidation, false move week beginning, W formation, multi-session. I got a US session, leg 1. I got an early Asian session, leg 2. Right? Intraday, spread out over the day tracer, right? This is the day changeover. This is the 5 p.m. reset settlement, these lines. Okay? Friday, Thursday, Wednesday, Tuesday, coming out of Monday's consolidation. Midweek reversal. Aggressive move towards the low, validates the crossover down. The W formation, late US, early Asia. You missed it. But guess what? They offer you a pullback in the US. There's your peak formation low for the week. 3 levels of rise, end on an aggressive railroad track, pull back, consolidate into Thursday, repeat the level, but murder the stops and pick up the pendings with a monster pin above the first leg. The light blue tracer, is yesterday's high and yesterday's low. When market makers throw a hammer above the blue tracer, that's for all the Joe Ross followers that take the breakout of yesterday's high. They snatch those guys and reel them right back in. No offense to Joe, he's a great guy. That is our signal, notice it's in the red shadow box, to enter. Three days, 3 levels, they hit it, they pull back, they go into consolidation, they issue a hammer above yesterday's HOD, or above, which happens to be the high of the week. Notice how the two come in together? The high of the day on Thursday coincides with the high of the week. They repeat the level on Friday, trap the traders coming off of the US session into consolidation in here. Then what do? The pattern continues going into the weekend. Bam! They hold it and they spike down going into the weekend. Someone said the sound is bad. Is it? Give me some Y's up there if everyone can hear me. No? Okay, it's not bad, or no, it is? Yes? No, all right, fine, okay. Okay, thanks. Got it. All right, so now, notice the difference in this W, how it's tight. There's only a few hours in between. This one is a whole day in between. This is London Open, re-hit again, almost in the US session, with a monster spike to the high. The monster spike to the high lets you know that they grabbed what they needed to grab. When you see that spike close, the damage is done to the retail traders. That spike is the aftermath or the wake of what they have done. What do they use to create the spike? Could be news, could be bullshit, could be your mother stubbed a toe. It doesn't matter. The behaviors are the same. They use the news to create that spike or create some type of anomaly on the chart to get you to fall for it. Listen, the retail side of the business works, or these guys wouldn't be so wealthy. Okay? Okay, so now you got trend is down, level 3 correction. You see this formation going into the US session. They hold the level overnight. But you know the high was formed. They repeat the high. You're a seller against everybody else. You know that in level 3, the trend cannot go down forever and does not go down forever. You identify late in the U.S. session railroad tracks and then consolidation to end the day. You are a buyer against the retail traders' down move. And here's how it played out. This is what we call a half a Batman. They hit the stops one more time. If you weren't already in and you happen to be in front of your terminal, you're a buyer right there. I want to say 2 or 3 weeks ago, I think Rick's in here. There was a monster W formation in the Asian crosses. I missed it. I was eating at the Cheesecake Factory. That piece of cheesecake cost me thousands. It was double railroad tracks in the Asian session on GJ, EJ. And I think Rick just happened to be in front of the terminal and caught that 80 lots long. I don't know if that was okay to say, Rick, but sorry. And I think he booked a monster gain that day. So my cheesecake cost me, I don't even want to say the number out loud, it makes me sick. It was such an obvious trade that I promise you when you go back you'll see it. I want you to go back, write it down, go back to GJ and EJ, I want to say about 2 or 3 weeks ago. I think I was actually at the Columbia. I'm at the beach, so not now. I'm staying at the beach, but I think I missed that. I was eating, I don't know, yellow rice and chicken or something. My gosh. Anyway, the moves are in there. Go back and try to identify that. Okay. I've been talking about their structures. Let's talk about the entire structure. Let me explain to you one more time. If you're sick of hearing it, I'm sorry. But this is, if I mentioned to you already, is the whole business. You got to get this. You got to understand. Okay? Every single day during initial market hours, Asian session, they're going to set the high and low. It's the initial high and low. They trade within that range and allow people to build positions, but not allowing anyone to take much of a profit. This is why you don't trade, Dave. Asia session. They then spread the swing. What time? 1 and 2 a.m. They widen the swing. That widening of the swing comes in before the London Open. Because the Asian market maker wants to validate the pending orders for the breakout traders. Okay? At the start of the European session, anybody? 3:30? They will severely correct a rise against their real intentions. Stop hunt, false move against what they're really going to do for the day. The drop or rise will trigger all the stops of the weaker traders. The ones that have taken the school, the regular technicals, read the books, the stop losses that go 5 to 7 pips below your entry candle or above your entry candle. The weaker retail traders that have fallen into some proverb that says if you're going to lose, don't lose a lot and make a really tight stop. It's bullshit. They then quickly go into consolidation. They don't have a chest cold. The market doesn't have the flu. They are accumulating contracts at another level. They will hit the stops one more time, as I showed you on the previous chart. They threw the spike above to trigger the stops and pick up the pendings on the other leg, the second leg. This action leaves the lower level or higher level traders stunned and stopped out. And then in one bar, they will shift the zone and trap all the retail traders at the lower or higher levels. And that's it. All right, I'm going to back up. Someone said they wanted to write the chart. Actually, a lot of people said, I'm sorry. Let me leave this up. I'll shut up for a minute, and then we'll go back to the other one, okay? I just realized that what I should do is, why don't you mark down the stuff you want and then go back and listen to the recording and get it? Wouldn't that be better than holding me up? Because everyone's at a different pace, people are writing. I think that is better, right? I always remember it's about halfway through the first day. Yep, make a note that, hey, I want to see the section that was at 9:50 p.m. and then go back and move up to that timeline. Okay? Yeah. I think everyone's agreeing that I can just get through the slides and flow the recordings, and then you go back. Okay, sorry. All right. This is exactly what I'm talking about. You have the Asian range, right? R equals range, 51.4 pips. The ideal Asian range is 50 pips or less. The 50 pips or less allows you to see the stop hunts clearly. The stop hunts come in 25 to 50 pips below the box and above the box. Ah, now it makes sense what this is. Here's the 25 marker. Here's the 50 marker. The shadow box highlights